Louis Storm from Vega Asset Management joins us now to share his take on how markets have shaped up today. Louis, thanks so much for your time this afternoon. While there are, some trade deals being sealed on one side, I guess we can be excited that there's some other news that we can focus on. Earnings season heating up in the U.S. with U.S. banks getting things started. The numbers released yesterday seem good, but U.S. markets and futures, the last time I checked, were in the red. What's fueling that? Are we just seeing some profit taking from traders, or are investors concerned about yesterday's inflation print with prices ticking higher in June?
Thanks for having me, firstly. Yes, it's a combination of all of that, basically. So inflation was higher than expected. This is putting a lot of pressure on the Fed. Trump wants the Fed to cut interest rates, but they can't do it if inflation is just too high. And basically that's because Trump is implementing these tariffs, and it's finally flowing through to the inflation print. So they're going to struggle to cut interest rates meaningfully, and that will flow through to GDP growth. At the moment, GDP growth still looks very, very strong, but we could see it slow during the next 6 to 12 months. So there's a lot to digest, a lot to take into account. But the results that we saw so far, most of these banks are saying that they are seeing a very strong U.S. economy. Wells Fargo decreased their credit losses, or their provision for credit losses. That basically just means that they are seeing less risk with the loans that they are giving out. So again, it's good signs, but I think we might see some volatility during the next half of the year.
And I was about to add there that uncertainty continues to be the name of the game, as the goalposts have been shifted again from July 9th. Now we are all awaiting the 1st of August. And sticking with that, maybe let's get your take on the rhetoric we've been hearing around tariffs and deals. Trump recently just struck a deal with Indonesia, tariffs of 19%. Does it seem like this has become, the base for perhaps the Southeast Asian countries? Vietnam also hit with a tariff of 20% when that deal was struck.
I think Trump, he wants to look like he's just getting a win. So firstly, there is an imbalance, and he's trying to correct that. But the way that he's doing it is a bit, let's call it volatile, or causing volatility in the market. He's sort of going with the scaring people and then basically forcing them into a deal. So that's a strategy he's using. We are seeing that, like, the first initial trade or the first initial tariff is never carried through. So it's usually just to get them to make some sort of deal afterwards. So I think, and traders have been seeing this, investors, you could see the market as well. They're not reacting to news as much as they were a couple of months ago. So they're seeing that Trump is actually not possibly going to push through massive tariffs. They are looking for deals.
And that really being behind what we've been calling taco trade, Louis. Let's move over to some company news. NVIDIA getting the green light to resume shipments of its H20 AI chip to China. A welcome move for the sector at large. And it also just speaks to, I guess, the US-China trade truce taking effect, right?
Yes, that's true. We saw the same with ASML. I mean, a large portion of, just going to ASML quickly, a large portion of their revenue is actually from China. NVIDIA, the portion going to China, that's not too big, so it doesn't have that much of an effect on the NVIDIA. But there will still be a lot of volatility in the next couple of years, I'm sure. There's still, the US-China relations are still not where it should be. So, for now, it looks better, and it looks like it is calming somewhat, but I think there might be some volatility to come in the future.
And sticking with news out of ASML then, what did you make of that guidance that they released, basically issuing a growth warning? What's behind that forecast? Is it still that tariff story that is playing out? I think the last time I checked, the share price was down over 7%.
Yeah, it is mostly due to the tariff. So just looking back, ASML, the actual results posted beat analyst estimates on the downside, on the earnings side and on the revenue side. It's basically due to the outlook that the share price has fallen. And I think they're possibly preparing investors for a worst case scenario here. I think
Uh-huh.
it is a possibility, but it's a low possibility. I'm not sure they would get no growth in 2026. I mean, you use the equipment that they're making for basically all of the chips that you need to produce. So I'm not sure that they'll see no growth, but I think they're preparing investors for this worst case scenario. If trade tensions increase and if tariffs do increase, then that could be something, that could be the scenario.
And over in the luxury sector, Richmond posted quite upbeat numbers, sales ticking higher in the first quarter of its financial year and being boosted by a strong showing from Europe and the Americas. Your analysis on the numbers, Richmond has really proved to be one of the more resilient players in the luxury sector.
Yeah, we are investing in the luxury sector, and we saw there's a big dispersion between the ultra luxury shares and the luxury shares. So if you look at something like a Hermes or Richemont, for example, they play in the ultra luxury segment, and these companies tend to be a lot less cyclical. Their clientele seems to be a lot less cyclical. I mean, the kind of client that they do have, if inflation does rise by 2% or GDP growth declines a little bit, it does not affect them too much less than the clients of other companies. So we see that these companies tend to be, their revenue growth and margins tend to be much more robust than the rest of the sector. We also saw this again, the Americas as well as Europe, sales was up by a good percentage. But Asia was a bit disappointing, where there was a decrease in sales. But yeah, we are very positive on Richmond. It's also one of our local holdings. So it is still looking very good.
All right, let's hit pause on the conversation, Louis. Before we move on to your stock pick, let's take a moment to touch on some counters that your industry peers find interesting.
I'm picking an offshore share, Adobe. So I'm sure a lot of people know PDFs, but Adobe makes a lot of software. Their Creative Cloud has got a whole suite of different design software products that they offer for subscription. And those subscriptions are very sticky. Sometimes so sticky you miss the small print of canceling your subscription, and when you see, oh my goodness, my credit card has been debited and I'm a subscriber for another year. So that's the nature of software subscriptions. People were very concerned about AI, as well as other software packages that compete with Adobe that offer AI, and thought they might lose market share, and that has put pressure on the share price. But of late, it does seem like Adobe are pulling up their socks and integrating AI into their suite of software products. So I do believe that they have turned a corner. They've learned a lesson. They are seeing the risk of AI and they're incorporating it. And therefore, that what has been discounted in the share price is perhaps overly negative. And that is why Adobe is my stock pick.
Yes, tonight I'm picking Old Mutual. So we do think that there's a lot of value in Old Mutual, and now that Old Mutual is getting the new CEO, Yuri Stradom, we think that there'll be opportunity to unlock that value. I think there's a couple of kind of quick wins that he can go for. They've already changed the divisional reporting structure. We think that they can reduce kind of central head office costs a bit. Once they get their own bank to go from a loss-making to a profitable position, that will be accretive. They've sold some of the loss-making African businesses already. So I think that there's a lot of self-help within Old Mutual. And also, it's one of the insurers that's quite geared to equity market performance. So we've seen pretty good performance out of equity markets of late, and that will also benefit the Old Mutual. Plus, they've got excess capital. So we talked earlier about capital allocation decisions. We think that that capital can be returned either through share buybacks because it's trading below its book value, or even a special dividend. And all these things added together will give you a good return over the next 3 to 4 years. We think even maybe 20% a year for the next couple of years.
So local is Lekker with Old Mutual by Mark, and then offshore, JP going with Adobe. Just your analysis on those counters.
So two very different
Yeah.
companies. Firstly, the Adobe. We also like Adobe. We don't currently have it in our portfolios due to we feel there's other opportunities with similar business models, but we do like the subscription revenue models. As Jean-Pierre mentioned, I mean, most of the subscription models, it's a small fee, but they can increase it quite easily. So they tend to increase revenues by 10 to 20% each year with ease. Microsoft is similar to that sort of business model. ServiceNow has the same sort of business model. And then Old Mutual, yeah, that's more a value play, and it has an amazing dividend yield. I mean, the dividend yield it's north of 6%. It looks quite cheap. It's not something that we hold in portfolios, but it could be a stock with some value to it.
All right, let's get into your stock pick. Then, what are you hanging your hat on today?
Yeah, it's also something a bit interesting. So ServiceNow, that's the name of the company. Basically, they focus on automating processes for large enterprises. Companies are trying to implement AI, and they're not sure how to implement AI into their companies. So ServiceNow helps them with that. ServiceNow is basically a software, and all other AI players integrate into their software. So it's also a subscription model, which we like, and we feel as all companies are pushing towards integrating AI systems to increase their productivity, we should see ServiceNow do very, very well. About 97% of ServiceNow's revenue comes from subscription-based revenue. So that's something that we are quite excited about. It could be a bit volatile, but it should be outperform over the longer term.
Louis, I hope ServiceNow has a 30-day free trial. But let's leave it there. Thanks so much for your time and joining us this afternoon. That was Louis Storm from Vega Asset Management.